But right now we're going to hear from Michael Landsberg, Chief Investment Officer of Landsberg Bennett Private Wealth Management. Michael, firstly I've got to ask you, the last time that we got the QRA, and yes it was, over issuance vis-a-vis the expectations. Now we're seeing a little bit less, but we're still at record levels. We're obviously going to find out, the duration coming through later on this week. But if we're talking QRA and we're talking the Fed and we're talking all of these exogenous impacts to equity markets, is there anything that you're seeing in those two in terms of the rate environment that could potentially be beneficial for equity markets?
Well, I think it's tough right now. I think the bond market seems to be trading on the fact that they think inflation is accelerating in the United States and certainly some parts of the world. Japan obviously seeing a little bit more inflation than normal. And I think that's what the bond market has kind of done in the last 90 days. I think the bond market has taken the job from the Fed. Fed was supposed to be raising rates, being data dependent. And I think the bond market said, well, if you're not going to do the job, we're going to do it for you. And they've had rates go higher. I don't obviously think we get another raise from official raise from the Fed, but I think the bond market's seeing inflation, and I think it probably continues to go higher.
But isn't that the problem? Because if you're, I suppose, letting the bond market act as a proxy for the transmission of your monetary policy, then you don't necessarily have control as to the velocity of their behavior when it comes to monetary policy. Shouldn't that be a risk that everyone is concerned about right now?
They should be. I think Chair Powell did a really good job for a long time orchestrating the moves, being consistent with his language, doing what he said he was going to do, kind of not listening to the people outside, telling them that he didn't need to raise rates because inflation was under control. And then he went back and said, we're going to be data dependent in July. And we've seen nothing but, gas prices go higher, food prices. So I've seen a reacceleration in inflation, and we've seen him kind of step aside, and we've seen even some of the Fed governors say, well, we may not have to raise rates because the bond market's kind of done it for us. So yes, I think there's some concern there. I think that's one of the reasons the equity market has said, well, the bond market doesn't really trust what's going on with the Fed. I think that's been an issue with the equity markets as well, recently saying we're a little bit concerned about what's going on leadership-wise.
Are there any concerns in your mind? Because obviously, when we're talking about issuance, what we're really talking about is this abundant level of fiscal spending that has led to some pretty significant deficits in the United States. We do have a new Speaker of the House now. Obviously, there is still going to be I suppose, bipartisan consensus for the most part in terms of funding to wars, in terms of trying to deal with the border issues that could potentially cost tens of billions of dollars. On top of that, also dealing with, the general funding needs of the US government, which, considering the interest payments, are massive right now. Is there any possibility that there could be any kind of austerity moving forward over the course of the next year? Because I would imagine that would then have an impact on the required issuance and also a negative impact on equity markets if there was to be any kind of austerity.
Yeah, I would tell you what, we've seen the opposite so far this year. I mean, the GDP in the United States has been strong, not because of the private sector, it's because of the government. Government's been spending all this money, hiring all these people, and that's why the GDP hasn't looked quite as ugly as it probably would in normal circumstances. The United States is very good at not having anything resembling austerity until it needs to. The American Congress has always been good at the 11th hour of doing something, and maybe they do it this time. But yeah, I'm not very confident that they actually proactively look to cut some spending. Yes, it's a more conservative speaker, and yes, there's some areas of some wiggle room. But as you mentioned, so much of the United States their spending is based on things that they've already been required to spend. So I don't know how much latitude they've got in order to do that. And yes, the interest payments, the interest is outrageous. It's gone up 2.5 times in the last 12 months. That's going to start to affect at some point spending, and obviously seeing rates where they are at 11, 12-year highs, that's a concern.
Okay, so for the regular investor watching right now, speaking from a broad kind of a basis, the trades that have worked for them, I'm assuming, would be that, you've invested in Mag 7 this year, it's paid its price. You've invested perhaps even in the index in terms of the SPX and maybe not the equal weight, but if you've invested just the index, you've won, all things considered. Is that, in your mind, to be expected to continue, particularly as it relates to those Mag 7? Because I can completely understand the case that, they're sitting on all this cash, they're clipping their interest payments just the same as anyone that's invested in cash as well, and there's potentially the expectation that AI could be an absolute boon. But realistically, do you think that's the most likely scenario, that we are going to continue to see this pretty much stellar run that the Mag 7's been on?
The 7 concern me a little bit. There's obviously, and there's a difference. These 7 have issues. Talked about Tesla, with orders slowing. Tesla does not look like Microsoft. So yes, they're in the 7 together. Microsoft and NVIDIA certainly don't look like let's say Google or Tesla, and specifically Tesla. So yes, while these 7 have done quite well, I think there's a difference in the mix of those 7. I think some of the 7 will continue to do well. Some of them that are more specifically AI, and some of the ones that are scrambling to show you that may have some problems. Obviously, cloud spending is coming down. But the equal weight's negative this year. I mean, a lot of this market has been held up by these 7. And if you look at the overall, the equal weight, the Dow, the Russell 2000, broader indices are showing you that the market's been weak, it's been negative, and these 7 have kind of come to the rescue. I think it's a lot to ask them to continue to come to everybody's rescue. I think people need to diversify. There's some of those 7 that are very strong. We continue to like them. There's others of that 7 I think you've got to continue to look to put money other places. Some of that would be cash. Some of it are other stocks and sectors that are strong growers that just haven't moved yet, because this move has been very concentrated, and that's typically unhealthy. Broad market rally is what we look for. We've got this very, very tight market rally, and these 7 stocks, have led, and that's been great. But how long can it last?
Yeah, I also am of the belief it's going to get a little bit tricky, because buybacks are coming off considerably from where they were before, but you've also got the tax loss selling that everyone that lost their bag when you're talking about those equal weights over the course of the year. Just really quickly before we go to break, and we'll talk a bit about some of your picks coming up after that, but just touching on something that you mentioned in terms of AI, are you, I suppose, certain that it is going to come as fast as, I suppose, what is being priced in right now? Because, of course, you can make the case that, Copilot is going to be this and NVIDIA is going to be that, but it's one thing to be building all this infrastructure. It's another thing for, the application and the integration in all of these companies that are then going to facilitate all the services coming anything close to fast. So do you think that it's a little bit overdone in that respect as well?
Yeah, we've been cautious. We rebalanced in the summer, and a lot of that rebalancing was in NVIDIA and Microsoft that had run so much. We want to be cautious of the fact that, yes, while we think a lot of this AI is going to come, it may have a different outcome 3 to 4 years from now as to who the actual winners are. But I think it's going to come. But yeah, some of this move, 200+% in NVIDIA this year in a short period of time. Yeah, there's certainly some speculation. They've been kind of the one to beat. Microsoft, obviously, with Copilot coming out very soon. Those are really the 2 that I think are kind of leading in the space in terms of they have the obvious answers to be able to get paid. It seems like a lot of other companies are stretching to call themselves AI, call themselves, it reminds me a little bit of a couple years ago of cloud. Everybody was a cloud company to try to get a multiple expansion. You're seeing that now with AI. So I think you've got to be careful. You've got to see who the real winners are and who the losers are. And at the same point, be reasonable with your allocations. We tend to rebalance. I'd rather sell when things are high or trim when they're high and have a chance to pull back and maybe add to them and not get sucked into some of this euphoria that with AI we've seen.
Very sage advice. And we're going to get some of your pick advice coming up after the break. Michael, please do stay right there. But when we return, we're also going to be talking about the scary fast new M3 chip-powered Macs. But will they accelerate demand? Find out after this. Welcome back to the street. Now, with many in the PC industry predicting a better 2024, Apple has introduced new M3 chip-powered laptops and iMacs at their Scary Fast event. There's going to be 3 versions of the M3. Now, they've kept the entry-level pricing for the 24-inch desktop at $1299, and as one reviewer put it, they stuck it in an M3 chip, kept the price, and called it a day. But maybe the emphasis is on the laptops. The 14-inch MacBook Pro starts at $1599, the 16-inch at $2500, and they're promising M3 GPU performance at just a 1/5 of the power consumption of the current 12-core laptop PCs. This almost sounds like an ad. Apple shares, though, ended the day up 1.2% ahead of that event. And speaking of Apple, we are back with Michael Landsberg of Landsberg Bennett Private Wealth Management. And I've got to ask you, Michael, in terms of Apple, because this is, the penultimate bellwether when it does come to the market. They don't necessarily spend their cash willy-nilly. They keep it on the balance sheet. They're clipping a pretty good yield. But in terms of your expectations for them over the next 12 months, do you foresee any kind of risks, especially, with the state of consumers, not just in the US, but around the world?
Yeah, I mean, obviously it is the bellwether consumer stock on the planet. Obviously, they're trying to get some things, the chip excitement. When they talked about scary fast, I wasn't sure if it was the announcement or how fast the announcement was. It was, you blink and you missed it. Nothing really Halloween either. I was expecting that as well. But I think at the end of the day, there's they showed slowdown in their June quarter in terms of the MacBook sales. PC slowdown around the world. So I think Apple's got to kind of figure out a way to get that moving a bit. These chips are fast. I think they actually kind of stuck in some AI wording at the end for the M3 to the Macs to say, hey, we can play in this space as well. They are the best game in town in the space, but obviously the laptop space is starting to slow down a bit, PCs, excuse me. So we like Apple longer term, but obviously it's had a great run, and it's probably one of those names where you kind of have to own it because it's such a big component of the market, but it's going to be tough to outperform kind of where they are with not much new product. These aren't really new. They basically, as your other commentator mentioned, they just kind of slapped a new chip in there and they're going to send it on its way. No new designs, no new nothing like that. But it is right before the holidays. So that's great for them to get some excitement and maybe generate a little bit more sales.
And something for the diehards to buy. Okay, so you're a little bit mixed on Apple. Let's talk about what you actually do like. And I want to start off with United Healthcare, because this is, if we're talking about bellwethers, this is the penultimate, all macroeconomic environments bellwether that many do put their cash into as a defensive stance. And I suppose it's kind of hard to find fault in United Healthcare considering just that resilience and the strength and their FCF and everything else. But just in terms of, I suppose, one thing, do you think that they're at risk with all of these, Ozempics and Mounjaros and the cost of these drugs, that they're going to be forced to provide to have to pony up the cash flow? Because that's something that's of a big contention right now, whether or not they're going to be liable as insurers to pay up the money for this.
That's probably the only potential crack in the armor we have with United Health. We love the dividend story. We love the management. And we actually love the GLP. We love those stocks, separately. Those are some of our favorite stocks that we have. The reason I'm not talking about them tonight, they've already run so much. I'm trying to find some things to talk about that haven't run. The GLP market, the GLP-1 that has basically disrupted everybody that's a medical device maker. I think it's hampered UNH's ability to make money this year, at least stock price wise, but it's a concern. I typically don't want to bet against UNH. They service like 1 out of every 5.5 people in the United States. They collect $1 and they give out a nickel to the doctors, and they do a really good job of that. Could it hurt margins if they've got some of these situations? Yes, but I think you've got to run, and I think they're going to actually make it harder to get this coverage, not for people that just want to lose weight, but some of the other trials that have come out around cardiac risk and about chronic kidney disease. I think those are going to be, things are going to be covered first. But that's probably the only thing that's out there that I'd say, as opposed to being 100%, positive on UNH, you're probably 95%. That 5% is going to be the peptide folks, and it's going to be the Wegovy and the Ozempic stuff. That's a concern.
You probably shouldn't have said the quiet part out loud. You know how people react when they hear anything Ozempic, they're going to start shorting UNH. Okay, maybe that actually benefits you. I've got to ask about Monster Beverage, because it has been on an absolute tear of late over the past year, and I struggle to understand its appeal. So perhaps you can explain it to people, just what it is that makes this company special in your eyes in terms of having some upside potential.
Well, there's a couple things. I think, I think globally, at least in the United States, a lot of people are, underslept, if you will. There's people that don't sleep enough. It's one of these things that's neglected, and people need energy. They need these things to be able to kind of function, and they've kind of relied on these types of drinks to be able to kind of give them that boost, whether it's psychological or not. They kind of feel better with having this bit of a boost. Monster in particular benefits from the fact that they've got the distribution network of Coca-Cola. So you could go anywhere in the United States in some random town, walk into a gas station, and they probably have Monster on the shelf. So part of that is the leveraging of the Coca-Cola distribution network that puts them everywhere. They've got a very strong management team, very strong growth, but that distribution network is positive. They do actually, we're talking about the GLPs again. There has been a little bit of that hiccup where people worried, is everyone going to become healthy and stop drinking some of these drinks? And that may have put a little bit of pause in the stock. I don't think that's the case. I think some of this kind of widespread hysteria that these things are going to replace everything and everyone's going to being healthy, I think, is nonsense. But Monster's in that space where people want the energy. They can find it no matter where they are, and that's really the big core story behind that.
I would agree with you in terms of just the most recent downside that they've seen, obviously on the back of everyone got smashed from what you're talking about in terms of the GLP impact. But I've got to ask you, considering that if we're talking energy drinks, it's one of those niche industries where you have a raft of competition and you never know what's going to pop. I'm thinking of, Prime by, the Paul brothers and the like. There's always a new entrant. There's always a new player. Doesn't that worry you in terms of the competitive risk that, one of these companies might absolutely pop? And I'm not trying to think about the Paul brothers, but if you understand what I'm talking about in terms of the risks moving forward for them as well?
100%. I mean, there is, and there's companies like Celsius that show up on the market and can certainly do well and have the ability to do that. I think it gets back to the distribution. There may be some better products out there, but Coke's kind of quasi-endorsed this because it's with all their distribution network. So, yeah, I think it's a little bit like tech in that space. We obviously have to worry about the next big thing to come out. Yeah, in the energy drink world, I think you've got that. I think the difference has been people do generate like a taste for something, and they may drink it long term. I mean, look at Coca-Cola's drinkers. You're either drinking Coke or you're drinking Pepsi. It probably doesn't change decade to decade. So once they get some folks with Monster, they like the flavor, they may stay with it for years and years regardless of what comes out. So I think that's really what's benefited the stock over long term. It's been a steady player. People have liked it, and they find it readily available in most places they stop.
And I suppose it's cool as well, motocross. And we're going to have to leave it there, Michael. Thank you so much for your time as always. Really do appreciate it and hope to speak to you again soon. That was Michael Landsberg.